What's up, friends? G Money is back for the second episode of the Bullion, Bitcoin, and Bullshit channel. Today, we're going to talk about a possible Black Swan event. Are we in the fourth turning? We are currently in the fourth cycle of the 4-year rewards halving. What the fuck happened in 1971? All right, well, we're going to take a look and let history be our guide through some of the events that have happened over the last century. So let's get started. We're going to start with this commodities chart. It's going to show us the year-to-date best year for commodities since 73. Okay, so these are all the peaks of commodity prices, peaks of inflationary periods, where these periods seem to line up with monetary reset. 1933, we have the FDR removing gold from U.S. citizens. 1944, we have Bretton Woods, okay, established the IMF. 1971 is when Nixon took us off gold internationally and denied countries from converting dollars into gold. And now we're here, 2021. Another period of rapid money printing. Okay? So let's see. Let's start with, what is the fourth turning? Well, if you look up the Strauss-Howe generational theory, it talks about how a recurring generational cycle in American history and global history, and how historical events are associated with reoccurring generational personas, archetypes. And we're going to talk about these turnings, okay? So there's a book called The Fourth Turning, by the way, if you'd like to pick it up. But they describe a four-stage cycle of social or mood eras, which they call turnings. The turnings include the high, the awakening, the unraveling, and the crisis, okay? I'd say we're somewhere in between the later stages of the awakening into the unraveling. It seems to be where we're at right now, all leading up to the crisis, okay? So let's talk about what happened in 1933. Well, we had President Franklin D. Roosevelt signed an executive order to forbid hoarding of gold coin, gold bullion, and gold certificates. The banks didn't want you guys having the gold. I wonder why. Here's the executive order issued April 5th, 1933. And they basically made people turn in their gold to a local Federal Reserve Bank. Okay? Because they didn't want people having gold. Anyways, skip ahead another 12 years, 11 years, and we have the Bretton Woods Conference. So on July 1st, 1944, the bankers and their world wars, well, they printed too much money. They had to pay for those tanks and airplanes. And someone had to print money to do that. So what happened was 44 nations met at a secluded Mount Washington hotel in Bretton Woods, New Hampshire. And they participated in what's known as the Bretton Woods Conference. The purpose was to agree on a system of economic order and international cooperation that would help countries recover from the devastation of the war. So create the war and then offer them the solution to print more money and take care of all of it. Sounds like a scam. At its conclusion, the conference attendees produced the Articles of Agreement for an International Bank for Reconstruction and Development, an international bank, and also the International Monetary Fund. Oh boy, what kind of animals did they create? So Bretton Woods, again, I'm linking these articles so you guys can go back and do your own research and read them. I'm not going to go through every detail of each one. But in 1969 to 71, they created the SDR, or the Special Drawing Rights, from the Bank of International Settlements, to where it's a basket of currencies that these central authorities lend out to poor nations and basically enslave them to debt until eternity. Okay. Then we skip ahead to 1971. And what happened in 1971? Well, our boy Nixon, he ended the convertibility of US dollars into gold and announced wage price controls. So inflation was on the rise big time. And there was something happening in the background where we didn't have the gold. Put quite frankly, we didn't have it. So let's see Mr. Nixon here. Let's hear him talk for a sec.
Data. In recent weeks, the speculators have been waging an all-out war on the American dollar. The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
All right, folks. Well, there you have it. We basically defaulted here. We told countries they couldn't turn their dollars into gold. So this era was known as the Nixon shock. Okay, he actually instituted wage and price freezes and surcharges on imports. And inflation, again, during these times was running at a rate of 5.84%. And we had an unemployment rate of 6.1%. So we had high unemployment, high inflation, stagflation. They say history doesn't repeat itself, but it rhymes. And I believe we are in a similar situation right now. What the fuck happened in 1971? Well, here's a productivity. Look at productivity in technology. 246% since 71. But the compensation hasn't kept up. Why? Well, because the money printers keep inflating the money supply and taking advantage of this productivity in the form of money printing. So they're basically enslaving the entire world and printing money. Anyways, there's a lot more stuff in this website here. If you want to take a look at all these different charts that show what happened in 1971 and how stuff really started to decouple because the money printers went out of control, because the system was failing, and that's what happens in that term. When you have a failed system, you have to keep printing more money to prop it up. Here we have the money supply. Okay, so we've got 1971, kind of a blip, and we skip ahead to 2008, the financial crisis, too big to fail. We see that little blip right there, and then we have 2020. Well, this little blip in 2008 was a zit on an elephant's asshole compared to what we have going on here. So let's just visualize what that looks like. $10 trillion in 2020 in physical cash. There's $1 million. That's what $1 million looks like. It's 100 million. Again, they don't even bother printing it anymore. They just literally push a button. It's all electronic. It's all digital. Can you imagine printing that much money? I mean, that'd be quite a feat anyway. It's a lot of paper. 2 trillion, 340 billion, 221 billion, 150 billion, 500 billion. Look at that. That's wild. Out of control. $2.3 trillion, 4 trillion. $27 billion per day, daily average of printed cash. Okay, so they were printing $27 billion a day in 2020. That's what it looks like visualized. Daily average dump of printed cash, $27 billion. All right. So let's move on and quickly talk about, this article was done in July of 2020 by the Epoch Times. It is behind a paywall, but it talks about the SDR and how the SDR controls some of the international banks, and the SDR is actually a basket of currencies, including the dollar. And if they were to remove the dollar from this basket of currencies, that the dollar would plunge in value overnight. Okay, and that's what they're talking about, a gold-backed dollar here coming. It's behind a paywall. It's a great article. I recommend you guys do read that article. Okay, so let's talk about gold. I've been a gold bug. I started with Ron Paul, and I've been buying gold for the last 10 years. However, gold hasn't really done much for me, has it? $2,000 back in 2011. It peaked briefly above $2,000 when Trump was in office, and now it's back below $2,000. So with all that money printing, gold hasn't done anything, really, realistically, in 10 years. And we do believe that is because of the paper markets holding the price of it down. Here's a 10-year chart of money printing, money supply. So you can see the huge spike in 2020. Gold. Nope. There was a little bit of there was a spike, but it's still below 10-year averages. Okay? So countries did go on a gold buying spree before coronavirus took hold. Okay, so here's kind of the net purchases, net sale of gold. So you can see all these central banks loading up in the last 10 years. But again, gold price, last 10 years. So there is something interesting coming with Basel III, and it basically restricts what some of these central banks can do with gold. A lot of them lease it out, and what happens is, it's kind of like a fractional reserve banking we have now, where deposits are lent out. Well, gold is lent out and leased. And the problem is that, they're highly leveraged, and we don't really know how much gold is out there in the world. We can speculate, but we really have no idea. So are the gold markets going to finally be reined in from Basel III? It goes into effect next year, okay? So the first was announced in 2017. It applies to banks operating in the U.S. and the European Union and Switzerland. But it does go into effect in London, I believe, in February next year, which is going to be interesting because we know London controls a lot of it. They are the lead gold trading hub. And so we'll see what happens. And if this can keep the price of gold down or if price is going to spike. Here's again, a problem with gold. In China, this company had $2 billion of loans backed by fake gold. So how do you verify $2 billion of gold is actually gold? You have to strip it down to the bare metal. How do I know if you give me a gold coin? How do I know if it's gold and not copper? I mean, everyday citizens don't know how to really deal with that. And that's why Bitcoin is important. And that's why we're going to talk about the advantages of Bitcoin over gold. Okay. In 2021, October 7th, about a month ago, JP Morgan is telling people, look, institutional investors are dumping gold for Bitcoin, okay? Just because it's a better inflation hedge. Again, the last 10 years, gold has done nothing. So JP Morgan is telling people, hey, look, people are getting out of gold and getting into Bitcoin. So what makes Bitcoin the superior asset? Well, first of all, everybody in the world pretty much has a cell phone, and Bitcoin can be held on a cell phone. And it has a predictable monetary supply. And so what happens is we know how many Bitcoins are going to be generated in the entire term of this code. 21 million Bitcoins are going to be the total amount of coins. It's on a decentralized network, and it's all derived by consensus. Okay? So we have an absolute scarcity of Bitcoin that we know. We're about at 18.866 million coins out there out of 21 million. The last coins of Bitcoin won't be mined until the year 2140 because the reward's halving, as we talked about them in the beginning. About 900 Bitcoins are mined per day right now. Okay, in 2024, that halves and goes to about 450 coins a day. So this continually halves until we get out to the year 2140 until the last Bitcoin is mined. Okay, so people always ask about what gives it value, and How do we know how many coins are on the network? Here's a Bitcoin chart from 2010 to now. We went from a few pennies, less than a penny actually, to over $65,000 a coin. Okay, and we're in this fourth cycle right now of the 4-year rewards halving. How do we buy Bitcoin? You can buy it pretty much anywhere. Okay, so this chart is interesting. Tech Dev, this guy's got some great charts, but look at this fractal, you guys. This is the chart that Bitcoin has been following for the last 56 weeks. Okay, and this is the 19 to 79 gold chart. So the gold line here is the 1970 to 79 gold chart. And the blue line is where we're at now for the last year. I'm sorry. Blue line is 2017 Bitcoin. The red line is the fractal we're in now in 2020. Okay? 2021 now. Where's this going? Well, is it going to follow the price of 70 to 79 gold? Okay. One other issue people have with Bitcoin is that it's too volatile. Well, in the terms of hyperinflation, this is the price of gold monthly. And so what do we see here? These wild fluctuations in the gold price while hyperinflation was happening in Germany. So, some interesting charts to look at. Okay, the 70 to 79 gold run, as we see in this chart over here. I thought I had a chart here somewhere. Anyways, so here's what the Bitcoin price is doing. Okay, so Bitcoin is not centrally controlled; it's decentralized across the entire planet. There is a absolute finite scarcity of it, and anyways, we're just pointing out some interesting things that are happening. I recommend you guys get some Bitcoin. I recommend you guys get some gold to prepare for this fourth turning, this Black Swan event that's coming. So, anyways, good to be back, and we will catch you next time. Thanks for tuning in.